Several people have kind of asked questions along those lines, like how can you make sure that the conversation with the client is, I guess you would say, more collaborative than combative?
I think that the reality is we're so primed to be handling or dealing with objections, and we're sort of ready for the fight. And the problem is, so is the client. I mean, the reality is they kind of know they're in a sales environment, and a lot of people are on a spectrum from quietly, well, you're not going to sell me anything, to, defiantly, if it's the guy, they might be the crossed arms. It's a lady, they might be kind of holding their purse a little close, and you're not going to touch my checkbook there. And I think it ties into what I said previously, which is, if they can see that you're on the same side of the table as them, if they can see your humanity, if they can see that you really care about the outcomes and what their family and what their survivors actually experience, and you can ask them lots of questions that engage their visual part of their brain. We are visual processors. What a lot of people do is they try to go right to the numbers.
Right.
They go right to the math.
To the logic.
That's a huge mistake, because that's not how people process. And
Right.
And the other thing is, if they just say, hey, we always give everybody a $50,000 or $100,000 life insurance policy with every auto app, like it's Ginsu knives or something. And that's not what really people want. They want someone who cares about them and cares about their family and cares about their outcome. And people can sniff out, if you're in it just for the policy count or the app count or the item count, and not it for them, they will know.
Yeah.
And so I think it's important to establish up front what's actually going to happen and what is your role in this conversation. So I might say, Scott, what I'm going to do is take you through a process that's first going to look at the risks that you're facing. So in this case, we're talking about the risk of a breadwinner's income being shut off and that money being lost to the family permanently. Then we're going to look at the resources that you may have in place currently to offset that risk, things that you may have personally or through work, and see if those are adequate. If they're not adequate, it's going to show up as a gap.
Right.
And if we see a gap, then I'd be more than happy to help you work through what are the best ways to close that gap, so that the situation that you just described earlier never happens. Does that seem like the right way to go about it?
Yeah.
And like, wow, that's awesome. And now what happens is you don't end up having a person say, well, I have coverage at work, so I don't need to talk about it. And I could just, in a very relaxed manner, and remember, not combative, collaborative, saying, oh, that's perfect. It's so great that you work for an employer that cares enough to provide a benefit like that. But in my formula of risk first, resources second, and determining if there's a gap third, what you just described is in the resources conversation. So would it be okay if I set that aside for just a minute? Let's look at the risk. Let's see what's going to go away. Let's see what the actual dollars are. And then to see if that will offset it. Is it okay if we do it that way? And it's like, oh, sure, no problem.
Yeah.
And now I'm not arguing about portability and all these other things. And I'm not arguing. I'm like, honestly, I don't care, because my process is going to get them to $1 million death benefit, and they have 50,000 at work. I'm like, good for you.